If you've been watching the global stock markets lately, you've probably seen some things that just don't seem to add up. The list of the world's top performers looks almost random, like the winners have absolutely nothing in common. But what if they do? In this explainer, we're going to pull back the curtain and show you the three powerful and kind of hidden engines that are driving these incredible results.
So let's start by just pulling up the global scorecard. Right away, you can see the picture is, well, it's pretty puzzling, and it definitely raises some big questions. Just take a look at this number for a second. 128.8%. That is a truly mind-blowing return for an entire country's stock market in a single year. And that really gets us to the core mystery we're going to unpack here. How is a return like that even possible? What in the world is going on under the hood to fuel that kind of explosive growth? Okay, so that massive return, that belongs to South Korea. But here's where it gets really weird. Look at the rest of this list. You've got South Africa surging over 82%, Spain climbing past 70%. I mean, on the surface, what could these countries possibly have in common? Well, we're about to show you. It all comes down to three powerful and very, very different engines. All right, let's kick things off with our first engine. This one is all about the future. It's driven by a technological revolution that is absolutely powering the phenomenal growth we're seeing in markets like Taiwan and, of course, South Korea. So what's the core driver? It's pretty simple, actually. It's the global AI arms race. This whole revolution runs on some very specific, very high-tech hardware. And right now, the world has an absolutely insatiable appetite for the advanced chips and memory that make it all work. And this slide, this is really the heart of it. You see, Taiwan and South Korea are the global epicenters for these critical parts. They make the advanced DRAM, that's the super-fast memory that AI needs to think, and the NAND flash memory, which provides the gigantic storage for all that data. These are, quite literally, the building blocks for every single AI data center on the planet.
But here's the thing. It's not just about new growth. For years, a lot of these markets were kind of seen as lagging behind the US. But now, with the AI boom, investors are completely reevaluating their worth. They're looking ahead and realizing these companies are set to make a ton of money, and that's sending their valuations into the stratosphere.
Okay, let's switch gears and move to our second engine. This story is completely different. We're going from the intangible world of AI to the very tangible, physical world of raw materials. And this is what's fueling the economies of places like Brazil and South Africa.
You know, the core driver here is classic market psychology. Whenever the world feels a little unstable, with geopolitical tensions and nagging fears about inflation, investors get nervous and they run for safety. And in the world of finance, safety often means hard assets, physical resources you can actually touch.
So what kind of resources are we talking about? Well, it's the classic safe havens, things like gold and silver, but also industrial powerhouses like iron ore. And then you have the really critical platinum group metals, platinum, palladium, which are essential for everything from cars to electronics. And it just so happens that nations like Brazil and South Africa are major producers, putting them in the perfect spot to cash in.
And this quote just sums up the whole strategy perfectly. See, investing in the companies that dig this stuff out of the ground isn't just a bet on price. It's a strategic hedge. It's a way for big investors to protect their portfolios against the risks of inflation and wild currency swings. It's a defensive move that is really, really paying off.
All right, our third and final engine is completely different from the other two. It's not about microchips, it's not about minerals, it's about people. It's about behavior. More specifically, it's about the massive global rebound in tourism and the surprising economic power it's unleashing in countries like Spain and Italy.
The driver here is just pure, raw, pent-up demand. After years of restrictions, people are traveling again with a vengeance. And this explosion in international tourism, it's like injecting pure adrenaline into economies that are heavily built on services like hospitality and leisure.
And to give you a sense of the sheer scale of this, just look at this number. Roughly 97 million. That's how many international tourists Spain hosted in a single recent year. That's not a recovery, folks. That is a record-breaking boom.
So how does this actually lift a stock market? Well, it's a direct line. Millions of tourists are spending billions on hotels, flights, restaurants, and shopping. That cash flows directly to corporate profits, which in turn boosts business confidence across the board and drives the entire market higher. So there we have it, our three very different engines: high-tech manufacturing, raw materials, and human travel. Now let's kind of zoom out for a second and see what this all means when we tie these threads together.
What we're really seeing are two powerful, classic stories playing out at the same time. On one side, you have the explosive growth of tech. That's a bet on the future of AI. And on the other, you have the classic value play, where investors are looking for the safety of hard assets like commodities to protect themselves against today's uncertainty.
So there you have it, the three distinct and powerful drivers. You've got the long-term tech engine fueled by that AI build-out. You've got the defensive commodities engine acting as a hedge. And you've got the consumer-powered tourism engine driving a massive recovery in services. And this really brings us to the core insight of this whole explainer. In the complex global economy we're in today, market leadership isn't coming from just one place. Strong growth is popping up in very different, seemingly unrelated areas, and understanding these separate engines is absolutely key to navigating what's happening.
Which leaves us with a final thought. We've seen how technology, resources, and travel have each powered incredible growth.